Hey guys, I'm Jeff Montgomery. Welcome to Tax Planning on the Whiteboard. This is part 2 of our series, Tax Brain Teasers. Did you get the answer right? Check out the last video to make sure. The question was, how much will Bob owe in taxes on that extra $1,000 that he took out of his IRA to go on that trip? Real quick disclaimer, guys, this is not specific to anyone's personal circumstances. Please don't use any ideas that you hear on this video without first consulting your financial professional. So now let's go to the whiteboard and really understand how much Bob owes on that $1,000 he took out of his IRA. Okay, on our whiteboard today, the question was, how much did Bob owe on that extra $1,000 he took out of his IRA? Remember, Bob was in the 22% tax bracket. His taxable income was $4,275. He was single, 64 years old, and retired. And that income comprised of $38,000 of IRA income and $25,000 of Social Security benefits, which total $63,000. But his taxable income was $42,275 because of deductions, and also not all Social Security is taxable. So he wanted to go on this trip to see his grandkids across the country. It's an extra $1,000. He took it out of his IRA, so now he took out $39,000 out of his IRA. So it's an extra $1,000. At 22%, I think most people would say, well, logically, 22% on that extra $1,000 is $220. Wrong. That would be the logical answer. But is there anything in our tax code that is logical? The answer is $407 on that extra $1,000 he took out of his IRA. Wow. Guys, that translates to a 40.7% effective marginal tax rate on that extra $1,000. How did this happen? Let's explain a little bit about how it's possible and what the effect has on Social Security. So again, he took out an extra $1,000. So if we take a look at this, how is it possible that Bob's tax rate is 40.7%? Some of you are sitting there saying, well, wait a second. The top marginal tax bracket currently is 37%. How can, and this affects folks that make significantly more money than what Bob is showing, how can this be possible? Well, let's take a look at a before and an after scenario. So we already said Bob's taken $38,000 out of his IRA currently, and $25,000 out of for Social Security. So Bob has an adjusted gross income of $56,525. We're going to explain where that number comes from on part 3, by the way. So that translates to a taxable income of $43,575, which gives us an income tax total of $5,204 in this example. So now Bob takes $39,000 out of his IRA. His Social Security benefits remain the same. We'll say $25,000. But look at this. We have $58,375 in adjustable gross income. So his AGI did not go up by $1,000. His AGI went up by $1,850. But remember, Bob only took $1,000 out of his IRA. Where did this mysterious $850 come from? Well, guess what? That raised his taxable income by $1,850. So his total income tax bill became $5,611. What's the difference there? That difference is $407 on that extra $1,000, which translates to 40.7% tax on that extra $1,000. So Bob got hit by what is commonly called the Social Security tax torpedo. If you Google this, you'll see this all over the place. So let's explain exactly where that extra $850 came from. So what happened was, on every single dollar that you take out of your IRA in this example, which is considered taxable income under this example with Bob, it actually dragged 85% of the Social Security from the non-taxable column on the 1040 to the taxable column on the 1040. Again, we're going to get into this on part 3. We're going to show you exactly how this works by sketching this out on the whiteboard, looking at an actual 1040 return. So what we have here is an effective marginal rate of $407, of 40.7%, $407 on that extra $1,000 tax bill. But his stated tax rate is 22%. So this is the Social Security tax torpedo. Can it be mitigated? Are there things that you can do to avoid this? We'll talk about that in part 3. Again, this is Jeff Montgomery with Tax Planning on the Whiteboard. If you like these whiteboard videos and you want more delivered to your inbox, just hit that subscribe button and we'll see you next time.